What's up, team? So, quick trade review today on the breakout trade I took on Boeing, and it's a good time to kind of continue, what we've been discussing in the last few lessons, where we've been breaking down, the different kinds of options, at the money, out of the money, the expiration date, all those different things. So, in this video, guys, I'm going to jump into the trade that I took today. I'll break down the exact options that I bought for this trade and the thought process behind them. I'll give you guys my whole game plan I had on paper prior to taking the trade, as well as some thoughts I wrote down in my notebook before taking the trade as well. So let's jump right into it. Alright, so the Boeing hourly breakout. Now the options that I bought for this trade, guys, were the February 22nd 420 calls. And again, we broke that down in the last lesson. February 22nd is the expiration date of the calls that I bought, so those calls would expire next Friday. And I bought the 420 strike calls. Those were a little bit out of the money. And I'll give you guys a thought process behind that. Now, before I jump into that, this was a nice solid trade. I paid $2.08 per contract, so each contract cost me $208, and I sold them at $2.90. So that was a 40% return, good enough for a $490 profit. Now the great thing about this, guys, or really the crazy thing about this, is that during the time I had that trade, Boeing stock itself went up about half a percentage point. So the stock itself didn't even move 1% really. However, I got a 40% return on my options. So that's kind of the crazy thing. That's the leverage of options. When I took the entry, Boeing was up about 0.7% on the day. When I got rid of those, it was up about 0.3 or so percent on the day. So not a big move on the stock at all, but because of a great low risk entry, that move is still good enough for a 40% return on those options. So take a look here, guys, at the options chain. And again, like we discussed in the last few lessons, you come into your chain, you're going to find the options for whatever given expiration date you want. And then here's the ones that I traded today. So here's the thing. Not feeling well today, didn't have the time or the desire to sit in front of the monitor all day. And quite generally, guys, the overall market was looking pretty shitty. Technology was not looking good at all. So no plans today for me to trade all day. I did not want a long position. However, to show you guys kind of how powerful these moves can be, the options that I did buy for $2 and some change went on to almost $4 today. So Boeing's move today was good enough to almost double some of those options. You can make a 100% return in a day trading options on the right move. That's the kind of world you guys are jumping into here. So these are the calls that I bought today, guys. The 420 strikes, they expire on the 22nd. And again, I paid $208, sold them for $209, and that was good for $490 of profit. So the reasoning behind these options, why didn't I buy the options that expired today? Well, there's a few different reasons, but the general statement, the general reason is that I like to give myself some freedom. When I take a trade, I don't want to buy the options that expire that given day. Not only are they very volatile, because the closer you get to the close, the closer those options get to expiration, they begin to rapidly lose value regardless of what's happening to the stock. So as a general statement, guys, with options, your calls, your puts, they're going to move right in sync with whatever the stock itself is doing. The only time that really isn't true with options is when you begin to get very close to expiration. And the most extreme case of that is the day of expiration. No matter how much Boeing was going up today, some of the way out of the money calls for Boeing that expired today were actually losing value rapidly, expiring worthless. So with that in mind, knowing that the options for Boeing today are going to lose value anyways and could really lose value if this trade doesn't work, I want to avoid that kind of volatility and that risk. So I bumped forward to next Friday's expiration. Now I can avoid that brutal, situation from taking place. And guys, those options have 7 days till expiration. If I had wanted to, if the whole market showed signs of awesome strength today, and Boeing exploded, and I wanted to hold on to those calls, I gave myself the freedom to do that. So that's something to keep in mind. Make sure you're not cutting yourself short when you buy your options. Give yourself enough time to hold on to that trade if you decide you want to. Even if you're planning to take a day trade, you don't need to buy the ones that expire that day or the next day. There's, as you can see, more than enough leverage on the ones that expire in 5, 6 to 7 days. However, you're going to be able to hold on to them should you want to. So that's the reasoning behind buying those specific options. They're a little bit out of the money. I like the leverage of the out of the money options a little bit more than the in the money. But most importantly, guys, I can avoid them going and taking a huge hit simply because they're about to expire. And if I wanted to, I could have held those over the weekend. So that's the thought process behind giving myself more than just today until expiration on those particular calls. Now, in terms of the trade itself here, so Boeing has been squeezing on the hourly chart. Now, a squeeze, guys, when I say a squeeze, that means it's another term for consolidation. And all that really means is that the stock is pretty much trading sideways in a pretty tight pattern, not making a move to the upside, not making a move to the downside, rather just kind of squeezing in a sideways range. The way that I like to explain this to a new trader is, it's kind of like a rubber band. The further and further and further you pull a rubber band, it's building up all of that energy. And at some point, that energy is going to get released. That rubber band is going to snap and it's going to pop. A stock in a consolidation oftentimes is the same kind of thing. It's squeezing, it's squeezing, it's squeezing. All that energy is getting pent up, and then boom, it pops. Sometimes it'll only pop out of its squeeze a little bit, but that's enough to make a profitable trade with the options. Sometimes a squeeze can lead to a huge trade. Two of the bigger trades I've ever had, both which were over $15,000 of profit in a few days, came from a squeeze setup. It was a much bigger squeeze than today, bigger picture setup. However, it's a great setup to learn. So BA was squeezing on the hourly chart and was just below the top of the Bollinger Band pre-market. Game plan here, guys, on paper, same game plan I had last night before I went to bed, the same game plan I, visualized in my mind, taking over and over, was to go long and buy those calls on a strong move above the top of the Bollinger Band. Now the game plan, once I took that position, if the trade didn't work out and it dropped back, I was going to let it go to pretty much the midpoint of that squeeze, at which point I would take the trade off. And in terms of profit taking, I didn't want to hold it over the weekend for a few reasons you'll see next. And I was very mindful that after this initial breakout, the next level of resistance at 415 was just above us. So with it being Friday, and with some of my thoughts right here, that was the thought process behind taking trades on a move above that 815 resistance. So a few notes I had coming into today, guys, and before I took that trade. Overall market still at a critical level. We keep discussing the 200-day moving average, that really important, early December sell-off level. Hey, stop chewing the carpet. Lay down. Sorry. Overall market still at a critical level. We also have a long weekend. The market isn't going to be open Monday. And as a general statement, technology is starting to look a little bit messy. You have Netflix trying to rocket to the moon every day, ultimately pulls back pretty hard. Facebook down, Amazon down. Pretty messy right now. So those are all the thoughts heading into the trade, guys. That's why I decided to make today's trade a day trade. I didn't want to hold over the weekend. And that's why I plan on taking that profit at that level of resistance or just above. So we'll hop over here to the chart now. Where are you? All right, so let's pull up Boeing. And again, so this was on the hourly chart. And I'll come out a bit here. Let me see. All right, so here's the hourly chart for Boeing, guys. And, really been in this tight consolidation range over the past few days. And these rubber bands right here, or these bands rather, those are known as the Bollinger Bands. And when they begin to tighten, the top Bollinger Band and the bottom Bollinger Band begin to tighten and come close together, that's what we can call a squeeze pretty much. Bollinger Bands are beginning to kind of get close to contracting. My game plan coming into today, as I mentioned, was to look to go long on Boeing on a breakout above that Bollinger Band. So when that took place earlier, guys, I took my entry right around this level right here of that arrow. Now the Bollinger Band pulled up, so everything's a bit skewed right now. However, that was the game plan and that was the entry I took. bought those 420 strike calls, next week's expiration, and I got myself positioned here on a move above the Bollinger Band. Now, if this pulled back and came against me here, guys, I was going to exit on a move to the midpoint of the Bollinger Band right here on that blue line. However, after that little dip on the open, when it came back up and broke above, and I took my position, it never gave me any trouble. So, in terms of execution, I was patient. I took the entry as soon as it presented itself, and I knew where I was going to exit. Now, the next step to this trade, guys, identifying that next level of resistance. So we're coming up here this morning, right? We don't want to just, sit back and start counting that profit we're making. We want to make sure that we're not heading towards any level that gave Boeing a little bit of trouble in any recent history. This morning we can clearly see over here, call it that 415-ish level, 414.50, whatever you want to call it, guys. 415, that was a level of resistance. So my game plan was to wait for a move either to or above that level of resistance, and then just take those quick profits off the table and call it a Friday. So I had that red line drawn on the chart today, guys, and that kind of signified where I was going to prepare to take profits. If I saw immediate weakness and a pullback right away, I was going to book them. However, I was also willing to give it some patience and see if we can get a move above. So it took about 40 minutes into the session or so, but ultimately it did end up breaking above that level of resistance. Made a nice little move above, nothing crazy. And at that point, guys, around 10:45 in the morning, so that puts us right around this range right here, I took the profits off the table. So I only had the trade for about an hour. I took the planned entry, I knew where I would exit, and when it broke above my target level, I took those profits and ran. Now, it didn't really do much for the next few hours. It made a nice move into the close, a nice little pop. But here's the thing that you guys should kind of, really let sink in. Get this real here. So the craziest thing here, guys, and again, I keep wanting to stress preparation. I keep wanting to stress, knowing these key levels, knowing where you want to enter, exit. All of those things are super important because when you do those things, that's when you put yourself in a position to start making some great money with options. I went long right here today, guys, and I exited right there. That move right there was good enough for a 40% return. And like I said, those options pretty much went on to double today. That move was good for a 100% return. Let that sink in. Take a step back and look at this chart. That little move right there was good enough for a 40% return. So, that's the reason most people get attracted to options. A small move turns into a big profit. 40% is huge, guys. Most stocks don't go up 40% in the course of a few years. But with that leverage to make a 40% return comes the same ability to take a 40% hit just as fast. So that's why a huge part of this options course, guys, aside from teaching you the basics, the different calls, the puts, we're going to jump into how to get orders filled in real time, all those smaller details. I hope a huge thing that you take from this course is just the insight and kind of, the importance of the preparation. You can catch 40% gains like that a few times a week. If you can do that, guys, you don't need big money to make solid, to make a solid living as a trader. That was a 40% return. You don't need a huge position in an hour on a 40% return to make good money. That was $500 for an hour of work. And honestly, guys, I put on the trade, I had my orders set, and I wasn't even looking at it after that point. When it hit my profit target, I got the alert. I gave it a few minutes. It popped higher. I took the trade off. Not many other places out there you can wake up, control your own life, make your own choices, and make $500 in an hour. But that's why I want to stress to you guys the preparation and all the work that goes behind it. That 40% was possible because I was up at 4 or 5 o'clock this morning looking at these setups, putting together that game plan, visualizing everything taking place. And when you do that, guys, every day for weeks and months and years, then there's nothing stopping anybody from reaching the point where you can make thousands of bucks a week, where you can make great money trading options. It's just the way the world works. When you approach something the right way and you're willing to dedicate yourself to the process, just how shit works out in life. So hopefully you guys are really taking in the importance of the preparation and identifying these key levels and putting a game plan on paper. If you guys can do that every single day for the next 5 weeks, and with everything you're going to learn in terms of strategies, how to buy the options, all those things, you're going to be in a really good point, guys, to really start, taking that next step forward as a trader. So, hope everyone has a good weekend. That was today's trade. Looking for a breakout above the top of that Bollinger Band. And let me clean things up here a little bit, guys. Simple trade. Breakout above that Bollinger Band. Take your profits at or above a breakout of that level of resistance, and then you call it a day. Beautiful trade, guys. 40% return in about an hour, and I look forward to next week. So have a good weekend, guys. Stay safe, enjoy, and I'm sure I'll talk to you guys in the chat room throughout the weekend.